everybody. Great sense of the rest.
Hello everybody and welcome back to the channel, and today's video that is going to focus on top 5 cannabis stock. This is something that has been requested by a lot of our subscribers, so therefore we thought, okay, now it's a good time to take a look at some of these cannabis stock. We gotta admit, this is not the area where we have the most extensive experience in, so we gotta go by the numbers. But we have selected 5 companies for you. The first one is Cronos Group, stock ticker CRON. The price is $10.67 per share as of today, and the market cap is $3.9 billion. As we can see from the return over the last 2 years, Cronos Group has been struggling quite a bit and is down 49.76%. The next stock that we have is Cresco Labs, stock ticker CRLBF. The price is $15.40 a share and the market cap is $3.3 billion. They have done a lot better over the last 2 years and they have resulted in a return of 73.25%. The next one we have is Afria, which is stock ticker APHA. The price is $18.95 a share and the market cap is $6 billion. That has returned 95.73%. So a really good number. The next one we have is Gibraltar Industries, stock ticker ROCK. The price is 86.01%. US dollars, and the market cap is $2.8 billion. It has gained 117.35%. And finally, and very impressively, with 304.97% return, we have Trulive Cannabis Corporation, stock ticker TCNNF. The price today is $49.74 a share, and the market cap is $5.8 billion. So first, we are obviously interested in understanding whether these companies are profitable in the end of the day. And as we can see, as of the last 12 months, ROC and TCNF has returned $65 and $71 million. So they are profitable, while as the 3 others are in the reds. And it's quite interesting already here to see Cronos Group, which is the stock that we saw that has struggled a bit for the past 2 years. They have lost $73 million and they've had an impairment of $40 million. So again, this is quite an indication as to why the stock has struggled a lot. They are simply not profitable. Some of the other companies may be investing a lot in their manufacturing capacity, so that could explain why they have a loss, because they're basically investing for the future. So again, we gotta look at the revenue growth for these companies to get an understanding of whether we should be concerned with these losses. But when we take a look at the net margin of these companies, obviously TCNNF is doing by far the best with 16%, followed by ROC, and Cronos is doing the worst with 57 minus. So again, really not good. If we take a look at the Beanish M score, it's just a mathematical model that determines whether a company has manipulated its profit or not. We want this to be less than 2.22 minus. And what we can see here is that CRLBF, the Cresco Labs, has a 0.2. So that's quite of a red flag to us when we see that the Beanish M score is so low, and that's something you should take note of as an investor. If we take a look at the Sloan Ratio, it's another way that identifies if substantial part of the earnings are non-crash accruals. We're not interested in this. We want this number to be between 10 to minus 10%. And what we can see is that ROC here has 25%. So again, some red flags with these 2 companies from this angle. Some of the others have some small yellow warning flags, but nothing to be too concerned about as of today. However, keep in mind on the Sloan Ratio for ROC and the Beanish M score for Cresco Labs is a bit of a red flag that should be taken note of. So first we took a look at the stock, and the trend for all these stock is in an uptrend, besides ROC that has been traded sideways for the past periods. In terms of net income, 2 of them are profitable, ROC and TCNNF, while as Aphria, CRLB and Cronos are all negative, especially Cronos have a very poor result. On the net profit margin, TCNNF is the best, followed by ROC and CRLBF. We then move into the next section, which is the return metrics, and we want to understand how high returns and cash flow margins is being generated by these companies. And the overall conclusion that we can come to looking from the numbers is that TCNNF, by no surprise, is the one doing the best on more or less all the parameters, with the exception of the free cash flow yield, where ROC is doing the best. Aphria and CRLB is not doing fantastically. It's quite poor, but again, as we explained earlier, there could be good reasons from them. They are maybe investing for the future, while as Cronos is again doing the worst of all the 5 companies. They are red across the board, so keep this in mind. We can also look at the balance sheet and we want to understand how strong the financial position are of these companies and why this is important. Well, obviously, if they're losing money, we want to understand whether these losses are sustainable for the future. So if we take a look at the current ratio, we in general want this to be above 1. All of them are living up to that. Actually, Cronos here is very well with 6.6 and CCNF is also doing quite well, although they're positive. They still have 4.7. So fine across the board. On the cash ratio, we also would like this to be above 1. And here we can see that both ROC and Afria and CRLB is struggling a little bit. They're not living up to that. So again, that means that they now have too much cash at side. And why that is important, especially for Afria and CRLB, is obviously, if they have losses in the next coming years, they may not have enough cash to cover those, and they may need to go out and raise equity through either issuance of new stocks, which will dilute shareholder value, obviously. So keep in mind with those two. With Cronos and TCNF, it's actually looking quite well against strong numbers. Total assets versus total liabilities, we want this to be above 1.5, and all of them are green, so that's good. Debt equity is also good across the board. The Almet Z score, which is the credit strength test that assesses the likelihood of bankruptcy, we want this to be above 1.8, and as we can see, is looking very well across the board. Especially Cronos is quite surprising. They have a very strong balance sheet, and that's really important to note when we see the losses they have had over the last 12 months. It means that they have plenty of cash to cover these losses going forward, so there's not much to be concerned about from this angle with the company. However, TCNF is also looking extremely well, both from a result perspective but also on the balance sheet. So overall, from a balance sheet perspective, it's looking quite fine overall for all the companies. So back to the overall ranking, we looked at the return on invested capital, and TCNF is doing the best, followed by ROC. On the levered free cash flow, ROC was doing a bit better, followed by TCNF. For Afria, CRLB, and Cronos, it's not looking too well as of today, but as said a few times already, there could be good reasons for that, especially with Afria and CRLBF. If we look at the Untitled ratio, great across the board, nothing to be worried about with any of the companies, and similar with the debt equity ratio, it's looking quite fine across the board. So here when you see the 4 and the 5 for TCNF, it's actually looking quite well, and there's nothing really to be worried about in terms of their results. Next, we would normally talk about the shareholder yield. However, as none of the companies are paying any dividend and only a very small buyback yield for ROC, we're going to skip over this part, and we're going to go to the earnings per share and growth. And here we obviously are interested in understanding whether the companies are expected to grow in the future. If we first take a look at the EPS growth year over year, we can see that all companies, with the exception of CRLBF, has actually been struggling and has a negative result. CRLBF, it's quite good here, 50% increase in the EPS year over year. That's quite good. We're a little bit surprised about the minus 50% for TCNF, so that's something to be wary about, that they have a positive result, but that has decreased a lot over the last 12 months. However, the more important feature for us with these kind of growth companies is definitely to understand whether their revenue is growing. And if we take a look, it's quite impressive numbers across the board. The lowest is ROC with 15%, but thereafter follows Afria with 34%, 308% for CRLBF, so that's quite good number and could be an explanation of why there was some doubts in regards to the Binish M score before. 91% on Cronos, again an uplifting point with them, and 109% for TCNF. So again, this is an indication of growth companies, and this is what we're really interested about. The profitability, we can live with that being poor as long as they have the decent balance sheet, and as long as we can see that revenue are increasing. And here we can see that there are substantial increases year over year, so that gives us some comfort with the companies. If we take a look at the revenue estimation for the coming year, we do not have the number on ROC. However, a significant growth is expected from Afria with more than 20%, almost 100% increase again for CRLBF. Similar situation for Cronos Group, and a small increase for TCNF. So again, CRLBF, they're definitely not profitable as of today, but they seem to be increasing, growing their business quite significantly from a revenue perspective, which is expected to continue in the future, and that's obviously a very exciting number to see. So again, if we take a look at the earnings per share growth year over year. All of the companies were disappointing besides CRLBF, which has an increase of 50%. From a revenue growth perspective, it was looking extremely well across the board. ROC was doing the worst with only 15%, and CRLBF had more than 300%. So again, really interesting, strong number. Finally, from a net income growth perspective, we didn't spend a lot of time on that, but a lot of them have obviously been struggling and they have gone down. ROC has done the least bad, followed by TCNNF. Finally, we want to take a look and understand whether these companies are currently under or overvalued. And if we take a look at our own estimated intrinsic value, which is based on a lot of different numbers and assumptions, we see an upside of ROC of around 10%, a downside on Aphria on around 24%, an upside on CRLBF on 13%, and downside on Cronos and TCNNF on 15% and 9% respectively. We can also take a look at the beta ratio, which is just the stock's volatility in relation to the overall market. If it's above 1, it means that it's more volatile than the general market. And from the ones where we have numbers, ROC, Aphria, and Cronos, we can definitely see that they are more volatile than the general market. We can also look at some other value indicators. One of them is the BV ratio. If this is above 1, it means that it's undervalued. If it's below 1, it's considered overvalued, and all these companies are overvalued from this angle. We can also look at the technical indicator, the relative strength index for the last 14 days. We want this to be below 30 because it means it's an oversold territory and it may go in an uptrend, while as if it's above 70, it's an overbought territory, and this could be an indication that it's may going to do a pullback. As we can see here across the board, there's no clear indication with any of the stock. However, ROC is moving towards oversold territory. So again, this could be an indicator that this may go up in the future if it goes below 30. Finally, we can also have a look at what the analyst is saying and what their perspective is. And we definitely do not follow them blindly because we know that they have their own agenda, but it's always good to measure them up against our own assessment. And what we can see here is that they see a downside on ROC for around 24%, while as we see an upside on 10%. On Afria, they see a small downside on 6%, while as ours was 24%. So again, quite a significant difference. On CRLBF, we are more aligned here. They see an upside on 24%. On Cronos, downside on 17%, so relatively close to our estimate. And on TCNNF, we are also in a bit disagreement with them. They see an upside of around 20%, while as we see a downside on 9%. So to conclude this, our overall value assessment of these companies is that ROC and CRLBF is considered undervalued, Aphria and Cronos is overvalued, we will not touch them, and TCNF is relatively fairly valued as of today. So what is our verdict on these stocks? Well, there's definitely one company that looks very interesting. If we first take a look at ROC, overall it has solid numbers and we think it should provide value in the long term. So definitely one of the better picks among the 5. We then have Aphria, which looks expensive compared to its numbers. We do understand that they have had revenue growth, but they have also had a significant loss and a decrease in the profitability. So again, not our favorite among the 5. We then have CRLBF, impressive revenue growth that is expected to continue, and in our opinion that greatly compensates for the current loss of the stock. In our opinion, this is undervalued stock with good upside, and it's definitely among the 5 compared to the current share price, our favorite stock. Then we have Cronos, definitely our least favorite stock among the 5. It's obviously good to see that they have a strong balance sheet, but the numbers does not look that attractive. Finally, we have TCNNF, decent numbers across the board. Our concern with them is that the revenue is expected to stagnate a bit. So again, we do not like TCNF. They're definitely the one who has the most solid numbers overall, but it seems like there's not much more to get in this stock, and that's why we would not recommend it. If you want something that is a bit more safe, they seems to be a relatively good pick though. So again, but in our opinion, we just don't see the same upside as with CRLBF, for example. This was all we had for today. We really hope you enjoyed this video. Please keep in mind that we are not professional financial advisors and this is only done for entertainment purposes. Please give us a like, it really helps with the algorithm. Please subscribe for future content. We send out regular stuff to you guys. And please provide a comment in the comment section. What do you think about these companies? Do you agree with our assessment, or is there something that we have forgotten? As we have said earlier in the video, we are definitely not experts within this industry area. So again, we may have missed something that needs to be highlighted, so we would appreciate your comment. Please also do check out our Patreon page. We upload the report with a significant amount of additional data that may be useful for you as an investor. It's definitely worthwhile to check out. We also launch individual reports on a regular basis that we do not show here on the channel. So again, there's tons of value for you to be captured by signing up to this. So we all hope to see you soon. Besides that, there's not much more to say than stay safe, have a nice day, hasta la vista baby.